Hi everyone, this is Sandeep Anand. Can we beat the stock market? John Templeton, the most legendary investor ever lived, and who was a billionaire, created all his wealth by investing in companies and assets of countries at the point of what he called as the point of maximum pessimism. And according to John Templeton, there is two ways to beat the market. The first step is taking the non-consensus path, and second step is being right at that decision. Now, going against the crowd is a very difficult thing for human beings to do. It's like literally going against the gravity. It triggers fears in our minds: fear of being stupid, fear of being wrong, fear of being alone, fear of being missing out, fear of losing. All of that, those fears instill our mind deeply, and hence we cannot go against the crowd. Herd mentality. Human beings are wired for herding, to be in social groups. And herd mentality in investing refers to investors' tendency to follow their fellow investors or other investors, what the others are doing. And that is a consensus view. And investors are largely influenced by emotions and instincts rather than by rational thought process or independent thinking. Humans are hardwired for herding. Let's take example, right? We are all in social media. We are in Facebook, YouTube, Twitter, whichever media you want to take. If you want to really follow somebody who's good in any field that you want to follow in, say like medicine or investing or any field, the first thing human beings would do is to look at somebody to follow and see how many subscribers or followers that person has, and then blindly follow that person without a second thought. Whatever decisions they make, suppose an investor, a leading entrepreneur, or a leading successful businessman has 1 million subscribers, he might not be a good investor. First of all, he might be a good entrepreneur. People just blindly follow what that entrepreneur tells. I mean, there are many examples who are billionaires out there who compounded at the annual growth rate of 4 to 5%. It's worse than S&P, half of S&P index. But they are billionaires. They have million followers. So people tend to blindly follow their advice, buy the SPACs, buy the stocks, whatever the scenario is. That's called herding, herd mentality. We seldom have our independent thought process. Now you can see in this picture what herding is. We are very similar to, Charlie Munger compared it to the lemmings. Interestingly, he's one of the most successful and rational investor out there. Herding is common in every aspect of human life, not only in investing. It's a form of social proof bias that affect investors. According to Britannica, someone who blindly follows a crowd, maybe even towards catastrophe, is called a lemming. This is the only reason why we have bubbles and crashes in the financial markets. Now, how to overcome the herd mentality in investing? At least that's my field, which I can explain with how to overcome that bias. The herd mentality bias can be overcome with just two snapshot views I'm going to put in your screen. One from legendary investor Warren Buffett and his guru, legendary investor Benjamin Graham. Let's see those two pictures. This is what Benjamin Graham said: you are neither right nor wrong because the crowd disagrees with you. You're right because your data and reasoning are right. And here is what Warren Buffett said: you pay a very high price in the stock market for a cheery consensus. In other words, if everyone agrees with your investment decision, then it's probably not a good one. So there we go. Three powerful legendary investors in last 2 centuries propagating the same wisdom. Go against the cheery consensus. Have your own rational thoughts and independent thinking underpinned by the data, and be daring to stand alone out there against the herding, which is at the point of maximum pessimism. That's a way to beat the market. Thanks for staying with me. Do subscribe. Bye for now. Signing off, Sandeep Anand.